Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, what is it today? Thursday, right? I think it's Thursday. Yeah, it's definitely Thursday. And I'm thinking maybe the market is ready to do something today. I don't know. Let's see. Let's go and look at what the market's doing here overnight, huh? Well, in the Treasury, we had a little bit of a move down yesterday, but here this morning, we're coming back up. So risk off again, S&P 500 down, oil down, silver and gold. Well, gold holding that 2000. There was a temporary dip below it, but they're back above now. Silver looking okay. Kappa a little bit on the downside. So I do see risk off flows across the markets. Bitcoin taking another further dump. I looked around yesterday and I never really found the reason for the buying over here in Bitcoin. I never did. And now we're getting further sell-offs. What's going on over there? Maybe warrants further research. And the dollar, we're even seeing the dollar on the upside here a little bit. So what do we got ahead of us on today? We do have a pretty heavy slate of news, relatively speaking. Okay, so we're going to get initial jobless claims and the Philly Fed Business Index here in 4 minutes. At 10 o'clock Eastern time, we will have U.S. existing home sales. We will also have some ECB speakers. We've already had a bunch of ECB speakers today. Bank of Canada, Bank of England, 4-week bill auction, Fed's Waller, Fed's Mester, 5-year tips auction, Logan Bowman. Yeah, all of the speakers. Is there like some crazy conference going on today or something? What is this? Fed's Listens event. No, it's just they're all talking at different things. We are getting a lot of central bankers today. I don't know what's with that. That's a little weird to me, to be honest. This is a little bit too close. Get it right there. Okay, so could provide some opportunity for us, and overall, like when I look at the kind of like the positioning and stuff, it just I'm kind of getting the feeling that they might want to move today. So it's time to be on our toes. Yeah, let's make sure. Let's make sure that we got everything set up correctly here. The news squawk on. Check the stream, make sure that's going correctly. It looks like we're good there. Got our Twitter up. Oakland Athletics say they will move to Las Vegas by 2027. Oh, Brannigan, I haven't heard from him in a while. Strong correlation that will aid in timing in 2023 is mapping the MOVE index against the S&P 500 over the past year. There have been 3 major shifts in bond volatility. The first was a surprise beat in inflation in July 2022 when the entire market was caught off guard. And then get the rest of that message, but I can probably guess the spots that he might be talking about. And I think he's right that the MOVE index has been very influential this year. think I need to bring my air filter in here again. The dog's been in here. Okay, so that Philly Business Index expectation -19.3. That one might be higher than expected. That's what happened with the New York one, right? Initial jobless claims were looking for a reading of 240 versus last week's 239, which, by the way, was a little bit above expectation and higher. So higher than 240 could create, you know, some more risk offloads. What kind of a dog? I have a Papillon. Have I not shown you the dog? Oh my gosh. I'm so terrible. I own the cutest animal on the planet. I'm not even joking. Okay, wait. Here we go. Okay. So it's 245. Wow, that went a little bit faster than I thought. Did you see I had the chance to click there and I decided not to do it? Damn it. That would have been 20 bucks. That moved. Whoa, the Philly Fed is -31.3 versus an expected -19. Wow. Wow. I'm concerned this could flip back on us a bit, though. Let's see if I have any pictures on my machine here. Oh, I only have pictures of him as a baby. There you go. There's baby Goku, the Papillon. Oh man. Ah, we picked a good one. We picked a good one. I have some good videos on my phone I'll have to put on Facebook or something. Oh, no, wait. I have them on TikTok. You're not getting any audio? Surely we are, because Trading Bunny can hear what I'm saying. Man, look at this. There is some iceberging there at 23. So how far of a move is that here in the treasury? It's close. It's close. I was about to say, did that just retrace like all of this week's downside? We're almost to where we started the week at. There's still like this gap down from last Friday. It goes all the way up to 115 and like 16. So man, I posted a lot of stuff on TikTok. I haven't posted like hardly anything all week though. A lot of what I post are stitches. This is random, but on NinjaTrader, is there a way to make one window and make it a tab of another window? No. So if you right click on a window and you have show tabs, and then you can right click on the tabs and you can say like duplicate in new window, duplicate in new tab. But I don't know of any way to like take a window and like put it into another Windows tab. and I have looked for that exact thing, so I totally understand what you're getting at. Man, it's still going. I'm a little pissed that I'm just sitting here, but like I totally chickened out. I was gonna say, well, you know what happened though was I didn't know the Philly number. So I looked at that and I'm like, well, with initial jobless claims, I bet you I could probably to sell 356. And then somebody else did it at 3557, and then that's when the Philly number came out, and it just went and went and went. So I chickened out, man. That was my opportunity. I blew it. Oof. Well, it happens, I guess, but I need to come up with like new kinds of stuff to do. New kinds of things to do on TikTok. I have the dog in a video where I did a data mosh and I can't find it. Be the person who starts doing magic tricks with the dog. Oh, here's one. So this is the one we got him home. Oh, it was such a puppy. It was such a puppy. Yeah, what a cute puppy, right? I'm telling you, for the first year of his life, I really think that he might have been the cutest animal on the planet. And I didn't make any money from it. Like, how stupid am I, right? Man. It looked like they kind of were thinking about going a little bit further, but like, look, they fell back into the liquidity hole here. You see what's going on, right? It's like I missed the trade, I see the liquidity hole, and I'm trying to distract myself because I'm so pissed that I missed it. Oh my gosh. Oh, I should do something about that. Okay, so one of my most popular TikTok videos was just somebody said, "Oh, I have a Herman Miller chair. It's not actually that great." So I stitched it, and I was like, "Dude, you gotta be careful. Like, you can't say that stuff online because those Herman Miller fans are just crazy, man. And you can't bash their chair on the internet. They're gonna come for you, right?" And that was like one of my videos that's got like 200,000 views or something like. Actually, what does it have? Yep, it has 199.2 thousand views or whatever. And this week, a video. Oh, who is Herman Miller? They make chairs. It's like a super expensive chair. So the innovation in the chair. Have you ever seen those chairs where like the chair, the seat is just like a mesh, right? They invented that so that like you don't overheat from sitting in the chair. It's just a mesh so that the air can blow through, right? There was a leak this week where they were showing like a conversation with the CEO, I guess, and the CEO was basically saying like, yeah, you guys didn't get bonuses. Like you can't focus on those things. Just go out and get the money. And it was like really tone deaf. It was like, and now everybody is boycotting their company and stuff. The unemployment numbers are out. We got 245,000 versus an expected 240. So we continue to see rising jobless claims, and we continue to see jobless claims higher than anticipated. But the real surprise, last week we had the New York Manufacturing Index, and remember we were expecting like a -10 and we got a +10 or something like that, and it was like, oh wow, actually they did way better than we were expecting, right? Well, the Philly Fed, we were expecting -19. -19 is pretty darn negative, right? And we got -31. That is, to me, a shocking number. And I think that has got us back on the market is about to move into a recession any moment now sort of situation. That's where we at. Oh, here's a video with me with the baby. That wasn't really a baby. The word that, this is like the undeveloped chin, but I think Asher was slightly cuter baby. Only by a little bit. Shouldn't compare them. Oh, here it is. Here's my data mosh. Check out my data mosh. There he is. And that's him a little bit more grown up. I'll keep it up there for a little bit so you get a good view. Yeah, I can confirm that you saw the papillon. It's such a good data mosh. I think it's a great data mosh. Look at that. See, I pull the money out of the screen and then I turn the money into a dog. He's one. Like, he was born the week after Christmas. So he's a little more than a year old. So he's what, a year and 4 months old now? Oh my gosh, they're so effing smart. They're so easy to train. And he loves to train. Like, I've had some dogs where it's like, oh, I taught them something and then you forget about it for a week. You come back and they don't want to do it anymore. Oh, he will totally do all the tricks. I need to go get some more treats though, so I can try and teach him more, I think. Because I could probably get him to do like obstacle courses and stuff. I got him where he will jump through jump through a hoop with my hands. I don't know why. I love this video. You know, this is one of those videos, like, let's see, I got 416 views on it. This is one of those ones where I'm like, this is so great. Why don't people watch this? What's wrong? TikTok is gypping me. The Chinese government doesn't like me, maybe. Maybe I should rethink that trip to China. I would like to go. I want to go to Heaven's Gate. I don't have anything against the Chinese government. Just, you know, not a particular fan of some of their more recent policies. That's all. Okay, are we coming back yet? No, it's still going. By the way, the action here in the micros is a little disjointed. Like there was some volume there at 3,547, but then there's like all of these gaps and stuff, so it did not trade through this very well. Also, you're getting a fairly tight, relatively speaking, in the 2-year. There's going to be a lot of people. So over here in the 2-year, I think you're going to want to keep an eye on 4%. I don't know if that's a number that we're going to see today, but it seems like there's been stuff going on. People have been paying attention when it gets to 4%. So part of me is looking at this and going, okay, so this is risk off again. Does this change my what would I say, my judgment or my current estimates of the larger economy? And I would say it doesn't necessarily change them, but it makes me a lot more confident in it, because last week I was feeling pretty bearish, but it was like, well, I don't know if it's going to happen, and maybe we're missing something because like everybody's too bearish, and you know, interest rates started going up again, right? This puts me back into, oh yeah, there's a very, very high probability that we move back into a recession. Okay, but now my issue is, if we assume that's true, what should the interest rate go to? Because it also seems to me that inflation is going to continue to be a problem. When you have these dual factors of deglobalization and you know, millennials coming into like their peak earning and all of that sort of stuff, and supply being weak, inflation is probably going to continue to be a much larger factor in the next 10 years than it was in the last 10 years. So how low can the interest rates actually get? If we're to say like what, 5.25 is the highest that they get, and then the Federal Reserve has to pull them back. Let's say they have to pull them back in September. So you could have like September, October, you have like 4. So that could maybe bring us back to 4%. I don't know. I don't know if the 10-year gets meaningfully below 3.5 off of this. I'm kind of waiting for some backflow here. The actual amount of net volume that came through on the 10-year here in particular, not actually that high. It was about a 5K shift. Yesterday's movement was more significant in terms of volume. So I'm curious as to why the market is not as actively trading this. I suppose one thing is that we have so many Fed speakers today, right? And as of late, those speakers have continued to be hawkish. Oh, the ZN moved pretty good. Yeah, we moved like what? We moved 4 basis points maybe? We were at 5.7 and now we're at 5.4, so 3 basis points. And that's a decent move. Wasn't like huge crazy, but it was a decent move. I kind of chickened out. I had an opportunity. I was looking at it and I saw 356 and I was like, maybe I'll click on this, and I didn't. And then after that it went. So I could be getting out at plus 20 and be happy and relaxing for the day, but I chickened out. I straight up, I chickened out. Looks about in line. Well, so no. So the expectation was 240 jobless claims and we got 245. So a difference of about 5,000 jobless claims is a reasonable miss or beat in the jobless claims, right? Surely we've had larger than that, but that's a decent beat or miss. But then the one that really shocked the market, I think, was the Philly Fed being negative 31 versus an expected like 20. Negative 20, and it got 31. So that Philly Fed manufacturing index, or whatever it is, Philly Fed business index was probably the more significant part of the movement, actually. I am concerned about this getting clawed back because, like I said, there are so many central bank speakers scheduled today. I'm not sure if it's a coincidence or what, but it's like everybody's talking today. And again, as of late, the Fed speakers have all been hawkish. So I'm concerned that that's coming up, and I see that there wasn't as big of a change in volume in dimes as I expected. I mean, it was decent. It was a 10,000 order switch in the 5-year, but the 10-year was a little tepid. So I'm concerned about the possibility of this clawing back some of those gains. So I don't want to be taking a trade in this area here. I want to, maybe it can come back down into here, and maybe if we get the timing and everything. So I mean, there is possibility of meta orders coming in and continuing to push this up after that. Okay, was just checking around a couple of things that I've been watching the past few days. Well, I did find, was looking at server rack stuff, and I did find one server rack that, one shelf that I might consider getting. $40. But I'm kind of thinking, do I want to do that, or do I want to get a drawer? I think I should probably not get anything until I'm ready to get the case. Good morning, Walter. You're a little late today, man. What's up? Man, this is interesting. You were helping the dad. Okay, you have an excuse. Okay. You're getting a reputation. Oh, by the way, how did the dollar move off of this? Dollar weaker. Oh yes. So let's come over to Zero Hedge and see if they've got a deeper dive on that number. Mispricings everywhere as we enter stagflation light. Okay, well I want to read about the jobless claims first, okay? Initial jobless claims were expected to tick higher last week, and it did, up to 245 from 239 prior, and higher than the 240K expectation. That is basically in line with the highest level since January of 2022. And here you can see, yep, we're back to January of 2022, so levels from last year. Okay. Oh, that's all we get. Continuing claims continue to rise. That's the highest level since December 2021. It appears those revisions changed everything. Yes, because they changed in February. They changed some of their methodology and how they do the revisions, and since then the numbers have not been very good. Okay. Shortly after the Empire Fed Manufacturing Survey unexpectedly surged back into an expansion, the Philly Fed Business Survey unexpectedly puked to its lowest since March of 2009. Analysts expected a rebound from negative 23.2 to negative 19.3. The headline plunged to negative 31.3 in April. This is the 8th straight month of contraction. Under the hood, prices paid fell to 8.2 from 23.5, but prices received fell to negative 3.3 from 7.9. So goodbye margins. Yeah. So that means I think that inflation starting to be not as big of an issue, because there does appear to be like some stuff coming out, some money coming out of the market. What do you guys think of Jeff Snyder and his take on macro? Okay, so I think that you can learn a lot of interesting things from watching Jeff Snyder, but ultimately I think that he has a framework and a theory about how monetary policy works and how the market reacts to it that is essentially unprovable, at least from like a data standpoint. Who's Jeff? So he is a kind of a, I would call an anti-Federal Reserve commentator out there that speaks about macro, and his main claim that I see most commonly is that he says that the Federal Reserve doesn't actually do anything. So like he's saying that when the Federal Reserve comes in and changes interest rates, that doesn't change anything, that the only effect that it has is on the market's expectations or impressions. So like if the Federal Reserve comes in and raises interest rates, it doesn't do anything other than it causes people to sell treasuries or whatever, or buy treasuries or whatever the deal is, right? And so the market is the one that's actually in control. So he kind of has this unprovable theory, which is like, well, if what we're seeing in the data is always from the market's expectations and has nothing to do with what the Federal Reserve is doing, then how do you prove that? Well, you can't, if the only piece of data that we can look at is the price. Okay. But I would say, and you know, I can't remember all of the different predictions that he's made and so forth, but I think one of the things was that he was kind of in the camp of they can't really get interest rates higher, sort of a thing. So I would think that if you were really following Jeff closely, you probably would have missed most of the selling in the treasuries last year. So like I said, you can learn some interesting things from him, but I would be a little bit skeptical of some of the things that he says, because it is not I would say it is outside of the mainstream opinion on central bank policy, and he has some pretty out there claims that you really just cannot prove. So if you want people to watch, especially when it comes to things like the euro dollar, okay, the euro dollar and these other kind of really deep dive quirky things about our monetary system, I would go and watch Fed Guy 12. So Fed Guy 12 is a former senior trader for the New York Federal Reserve. So he traded for the Federal Reserve, and he understands that system very, very well. He wrote a book. Yep, Joseph Wang. That's his name, Joseph Wang. His Twitter handle is Fed Guy 12. He understands that stuff very well. He wrote a book, and if he says something, I very much trust what he says. I very much trust what Joseph Wang says, and I don't really trust Jeff. To me, Jeff is one of those guys that gets aired because he's saying crazy things that certain people in the political sphere are interested in hearing. But I don't think that he's actually giving you a useful market information. Should not trust anyone when you're yourself. Well, you should always try and verify information, right? One of the things that I would say is like, how much of the information that you get is like very easily verified, right? Like if there is, if the White House comes out and says something and then it gets reported and then they're reporting that, and You could go and verify that and go to the White House or whatever the deal is, okay? But in most cases, you don't have to, right? How much information like that are they posting that you know is true and that you don't have to spend a whole lot of time verifying and is actually useful to your trading, right? Those are the people that I would pay the most attention. You get distracted by his teeth. I can't even think of what he looks like now. Oh man, now you've got me thinking about it, man. Don't say things like that. You shouldn't have said that, Trading Bunny. I can't really even get a good picture of his teeth, so. Yeah. I mean, he does run a fund of some sort, so. Maybe I really I think part of it is that I'm just too lazy right now. I tell you what, when it comes to the channel, my main focus right now is I want to get that volume profile video up, because that's the thing that I like, the piece of information that I think would benefit the trading world the most. And I guess we're waiting for Uzi to get his power supply so that he can build his computer. He's not here this morning though, so that gives me hope that he's building it right now. And we can get that. I talked to the CME about it, and I can do it. I have to have like a license agreement with them, but that doesn't cost anything. But then the data that I want is about $2,000. So unless you guys want to crowdsource it, I think what I'm going to do is I'm going to put the video out, and I'm going to mention like, well, I wanted to go back further than that, but here's how you could possibly do it. So if you guys show the interest, then maybe I'll do it. Oh, he is in here? That means, that must mean he doesn't have it yet. But I don't want to spend $2,000 on that data that I don't think would actually provide edge to us. But it would be good for the video. Still on back order. Oh, that sucks. So what I would be doing with the data is generating point of control value area, high value area, low levels for the last 20 years or whatever is what the data would allow me to do. It's basically time in cells for all the way back as far as the CME has it. Right. And I have a back test set up to test a simple strategy based on if you open above or below these levels. So basically testing basic volume profile setups. One of the things that I thought was kind of funny when I got into that and I started looking at the stuff that was around and what would I potentially backtest, a lot of the quote unquote volume profile setups have nothing to do with the volume profile and are based on the opening range. So actually what they're doing is they're combining volume profile, opening range, and maybe a couple of other things. But the setups that are just purely about the volume profile are actually like very simple. Yeah, I would call it a technical trading method. And so the point is to show you the limited utility that they actually have. Because what I see a lot of is people will post statistics about these things, about like how likely we are to visit the point of control and that sort of stuff. And so they're basing all of their trading off of an analysis of the volume profile. And my contention is that that does not predict future orders very well. I don't think it would be of much use, a waste of, well, yeah, that's the point. Yeah. But well, when I say it wouldn't be much of much use, I okay, wait, hold on. You got a bunch of comments here. Let me before I get into that. I would think that volume profile would at least highlight areas of damaged liquidity. Well, okay, so it can show you areas, it could show you what happened yesterday. And yes, you can kind of, in some instances, make, I would say, judgments about that. But the problem is that like it happened yesterday. So it's usually not relevant to the market maker anymore. Like my heuristic is 45 minutes. If it's been more than 45 minutes, then the liquidity hole can be filled. After all, no two traders use volume profile the same, so how can you tell if it works? Yeah. Well, so I think that the framework that you take it from is like, here's what we actually know. Here's what they teach you in volume profile, and here's what we actually know, right? Because the thing that's interesting about volume profile is that it actually was a pretty decent theory based on real observations of the markets, right? The market does do this thing where it's like, it seems like it's in quote balance, and then there will be some movement to extend that range and push up to a new range. And sometimes that range gets rejected and it moves back to that area. And sometimes it gets up there and then it forms a new balance area, right? Well, when you start using words like balance and, it kind of has more to do with why do these things happen? And the auction market theory behind this is not an accurate description of how this happens, right? The market microstructure research that we have, I think, is a much better and thorough explanation that we have large meta orders are out in the market and that can create trends. And then once that large meta order is done, there is a post meta order mean reversion period with a decay, and then it will just sit there. And these areas that they're referring to as balance are areas where either the market is not doing anything and price just sat there for a very, very long time, or areas where they got stuck because of the damaged liquidity and the liquidity holes. And what you will do, how you kind of incorporate that into your trading changes as a result, right? So it was basically more advanced knowledge than the volume profile, and that's why I feel that it would be very, very valuable to the trading community, because I don't think that there is any form of analysis or thing that has a higher reputation and it is thought of more highly, especially in the futures trading community, than volume profile and auction theory, right? And so the video is intended to be a little bit of a takedown of that. So it's intended to be like, okay, auction theory is wrong. Here's what we know now. It's more advanced, right? So maybe I shouldn't say it's wrong. It's just it was we have a better understanding of it now, right? So because it's so popular and so forth, giving people the more detailed information about this, I think would be very valuable to them. So that's why I want to do it. Yeah, this is going to be a good video. Yeah, and I mean, for you guys here in the stream, I've talked about this before, so I think you know what I'm going to say in the video, but that's the video that I'm working on, right? Anyways, so the whole point was, okay, I need to get in on that, and as such, I haven't posted a video in like 2 months or whatever, and I've also been working on my desk a lot. But the YouTube channel on its own has gotten to 10,000 subscribers and just continues to do well without me doing anything. I'm quite surprised at, like, it was only a few weeks ago that we were at 10,000 subscribers and we're already gained another 200. Like we're getting like 10 subscribers a day now, which is a lot to me. So I'm kind of sitting here like, man, what's going on? I'm probably slacking, you know, I'm slacking a little bit. I have been thinking maybe I should make some videos. So you know what was something else I saw? I haven't watched the video, but Humbled Trader made a video a few days ago that was basically like, I was wrong. You shouldn't try and trade full time. So I haven't watched the video. I don't know what's going on, but I'm thinking I should make a video about that, because that's something that I could probably write and put together very easily and put out on Monday. And yeah, it's probably clickbait, so I need to watch the video, but either way, that's a video that I could make something about and could probably get, like, you know, they see it in the sidebar or it gets recommended after their video, or I could talk about it, right? She's not a pole dancer. What? No. Are you for real? Oh, here is a video of her pole dancing. Oh my gosh. But that looks like that's her hobby / how you stay fit sort of a thing, because she's in like a studio with pole dancing. Yeah. She's not a stripper, she uses it as exercise. Yeah, I should probably make a video about my health routine, because I'm starting to realize that my routines are way more elaborate and strict than the average person's. That's the ADHD coming out, man. If you have ADHD and then you're on medication and for a long, you know, since you were young, and you have a really good control over it, it leads to certain things that are just not normal, unnatural. Like you turn from a person that has like no impulse control into a person that is too much in control. And you don't necessarily do what's best for yourself all the time because you're too much in control. No, I know it's weird. No, you know what this reminds me of? This reminds me of that discussion where I realized that the way that pole dancing works is that the pole spins. Because I've never been to I've never seen any of that stuff. And you know, it becoming like a trend more recently is like weird to me, but I didn't know how it worked. You look back on it, I was like, well, what exactly how do you think they were spinning around the pole like that then, dude? Come on. But whatever. But no, I have to watch the video. Either way, that's a video title that I think I could make a video about, because I don't think that people should be coming out trying to day trade full time. I really don't. So number one, most people are not going to be successful with day trading. Okay. People will have periods, and you had a period during 2020 when there was a lot of people that had success for like a year or 2 years. Okay. But being successful with that over a 5-year period is very difficult. And imagine you spent 5 years of your life doing that with day trading, and that was the only thing that you did. And then after 5 years, you realize that it's not going to work out, or you go bust, right? And now you're 5 years behind in your career or whatever else it is that you could have been doing. Like that is a huge price to pay, right? And number two, that's like really rough on you. Like it is rough on me to come in here and just trade for 2.5 hours, and you're going to go and do it full time. Like you're going to do it 8 hours a day. That is like as a retail trader, man, no way. Like if you want to trade full time, you should really be trading for a firm. Like seriously. And it sucks that it's so hard to get in as a trader for a firm unless you're like coming out of school or you have the in or whatever the deal is. But it is what it is. I think if you want to trade full time, if you want to trade professionally, that's the way that you should do it. Yeah. Well, you said that she asked on how hard. And the thing is in this video, I don't think that I would reference her at all. I wouldn't be like a response video. Instead, what I would do is I would look at what she's saying and craft a video that either expands on or addresses the things that she talks about, with the intention of it being, you know, it getting more views from it being a suggested video on her channel. Because some of the videos I've gotten that did the best were because it was getting recommended from her channel, right? So I should probably try and do that. I saw that last night. I'll go in today and see what I can get. Trading is even harder than how hard she thinks it is. Could be. But it is true. Like that's one of the things that she's kind of pushes. Like, oh yeah, anybody can do this and it's great. And I've had a lot of success. And I'm like, I think you're a little too new to be saying that. was my take. It's really hard. Doing what I do, and when I say it's really hard, I mean like, kind of like some of the mental battles and stuff that you play. Because on one hand, I don't know jack shit. At least I don't know very much compared to like professional traders, you know? So like I would love to have a job on a desk like for JP Morgan or Goldman or somebody like that. If I could do it without having to move to these places in the United States that are falling apart, I would love to do that. And I could maintain my current lifestyle. But I would love to do that. It's super hard to get into those. But I don't know. The reason why I want to do it isn't because I think I would make the big money or anything like that, but because I believe that there is more knowledge from those institutional traders that I would like to gain, you know? And there's some development and progress that you'd be able to get in that environment that you can't get on your own. So I really would like to do that. On the other hand, there are a lot of retail traders out there, and there are a lot of retail traders that started trading in 2020. And I've been doing this now, just the futures trading, for like 5-6 years now. And I've been watching the markets for much longer than that. So I feel like that to some extent in the trading community, I'm kind of becoming an old hat. I'm kind of starting to become OG sort of a thing. And I will see so many channels up and coming that blow up where I really don't feel like these people know what they're talking about, you know? So it kind of makes you wonder, well, what is it that I'm saying that might be incorrect? I work really, really hard to limit what I say to things that are provable, that are either provable or opinion. So like, should you trade full time? That's an opinion. I can bring some statistics into it, but that is an opinion, right? Yeah. And so sometimes the head games that you can play with yourself, if you care about that too much, is like, the whole YouTube thing, you know, I was saying that YouTube kind of like encourages people to be narcissists. So social media in general, like this whole generation is encouraging people to be narcissists. Well, the other side of that is that being a narcissist is really rough on you, right? Because you're going to think you're the greatest thing in the world, and then the YouTube algorithm doesn't send the people your way, and that can mess you up, right? Only if you have a trading edge? Well, so here would be my question to you. How do you know that you have an edge? Because it seems to me that Seth's definition of what an edge is and how Seth determines what they have an edge and the amount of data that he says you need to have an edge is much, much higher than what most people think, right? Most people come in and they trade for 6 months and they've made money, or they've traded for a year and they've made money and they think, I've made it, I'm a profitable trader now. And Seth is sitting over here being like, most people don't make it past 5 years. And it's very, very common for people to come in and think that they've made it and they didn't. And if I could tell you the number of times that I've had like crazy arguments with people, because like I'm not out there to like tear people down and argue with them, but there are certain things that you say that just set these people off, right? And one of those is to tell them that if they think that they've been successful and you ask them like, well, do you have 5 years of return? Can you prove that? And then they don't want to do it, right? They get so angry because you are questioning, you are striking at the heart of their identity, right? And I've seen so many people that they get away with that for 2 years and then they blow up. It's extremely common. Like I would say, if you were to look at people that they've been trading for 2 years, okay, and they've been successful over that period, and let's say that they've been very successful over that period, okay, like they've more than doubled their money in a year and that sort of a thing, okay, over a period of 2 years, okay, I'm going to bet that 80% of those people end up blowing the account before 5 years. That has been, I don't have statistics or surveys to show that, but that has been my experience from talking to people and watching other people. You're trading 2A, I would suggest don't trade, but if you have a good, well, okay, so there again, that's kind of like, I would, you know, this comes back to some of these arguments that we've had about definitions and things like that, but if you're trying to do like purely technical trading, like you're only watching the DOM and that's your sole source of information, you're only watching the DOM on one instrument and that's your sole source of information, it's going to be very, very difficult to be successful because there are some real edges in there and everything, but the edges that you can pick up from just that are very competitive and the robots are really good at it. So you probably need more than just the DOM, unfortunately. But the good news is that there's a lot of other things that the DOM complements really, really well. So when you take this other stuff that you've got, like an informational inefficiency, and then you understand the DOM as well, you are a real force in the market. If you really like watch my trading, I don't always know what's going on, right? But when I have the informational edge, I kill it. We get the best trades. You get in and out, and it just runs, and we catch like the very edges of them. On those ones, we tend to be very efficient, right? We worry about what other traders do. Yeah, probably. The traders in the bank use the DOM and order flow. Yeah, okay, so that's your limited opinion. Traders at the bank are playing a completely different game, and they are not just using the order flow, actually. Okay, so the thing is that the traders in the bank are really like block traders. That's a different game, right? Because the game that they're playing is not, okay, in the next 30 minutes, is it going to move up or down? Okay. The game that they're playing is not in the next day, week, or month, is it going to move up or down? That's not the game that they play. The game that they play is, my client wants to buy X amount of this. What price should I quote them? And then when I have the trade, how do I execute this in the most efficient way possible so that I make the most on the spread between the price that I actually got and what I quoted them? That's the game that they play. It's a fundamentally a different question, right? One that, by the way, the tools and the things that we know about the markets is much better suited to, if you've noticed, right? Deposit money, go blow some accounts you figured it out eventually. Well, anyways, so going back to the original thing. So if I make this video, I think there'd be 3 things that I would say, right? So, which is number 1, like going and doing it full time is like a huge investment when most people don't make it through 5 years, right? And number 2 is that it's very, very draining. Like you're probably putting in too much trading full time. That's going to age you real quickly, right? But the other side of it is that you will learn better and you will perform better if you approach it more as a hobby. And then if you do well enough, it comes to, you do well enough that you do end up starting doing it full time. But even if I was having enough success that, I could come in here and trade 2.5 hours a day and make $100,000 a year or something like that, right? I still wouldn't try and do it full time or make it like my sole job, right? I would continue to do what I'm doing now, and I would just spend a lot. My day would be much more about doing research and making videos, is how I would shift things. Or if we were making enough from the YouTube channel that I could quit my day job, again, I would be primarily researching, making videos, and then I would probably still want to find some sort of a day job that would force me to talk to people during the day. What does figuring it out mean in real terms? For example, what do you figure out in order to be successful and trade a risk? Well, no. So I think that what you've got to figure out, the thing that I would be looking for is what kind of information am I good at finding out that where I have an edge over the rest of the market, essentially, right? I think that edge generally can be digested down into a piece of information you have that other people don't, right? That's why I always say, like, okay, which instrument should you trade? Well, if you worked in the oil industry for 30 years and you know a lot about oil supply and demand and how they build new rigs and how that whole industry works, you should probably trade oil, because what you know about that industry is going to be a benefit to you that other people don't know, right? If you worked at the copper mine, you might want to consider if you can get into trading copper. I think that would be a great instrument to trade. Okay. If you don't have that, I think that treasuries is an area where a retail trader can learn a lot and develop an edge, because there's a lot of information out there about what's going on with monetary policy and so forth, because it affects everything, right? Trading is the work and learning is the hobby for me. I don't know. I'm not quite sure what that means. I tell you what, some of the learning that I'm trying to do is super rough. Like, I think that most retail traders' idea of like trading education is watching a video or reading a book and them just walking you through scenarios on a chart, right? And the stuff that I'm looking at is like all of this math where I really have to set it out on a desk. I have to have a piece of paper. I have to take notes. So sometimes I have to try and derive things myself. You have to reference words that I don't know, mathematical terms that I don't know. Like, it's very involved, you know? It is work, yeah. In my world, if I'm not making money from trading, no one wants to hear me talk about it. Well, the average person doesn't, right? But here's the issue with that, right? So, you know, this is funny. So let me get into a different subject, if I could, and then I'll come back to that. All right. I saw the Super Mario Brother movie yesterday. I thought it was pretty good. I am a little shocked that the Rotten Tomatoes score for it was so low, because I thought it was an 85% movie, not a 50% movie. And I kind of wonder, so sometimes I feel, well, not sometimes I feel, I feel, I honestly believe that there are some players in the industry that are given higher scores because like the reviewers are biased to them. Like, if you're a Disney movie, you get better reviews than what the movie actually is. You know, I think that the DC movies were not as bad as the critics said they were. But they were doing that because they were rooting for the Marvel movies and Disney, right? Yeah, I'm talking about the critics score. Yeah. The critics will rate it low if it's not big on the ESG messaging. Well, yeah, and so here's the thing. Is that when you watch the Mario movie, you look at the struggles that Hollywood have been having, and it kind of is like, well, geez, you guys are really dumb, right? Because what you have to do to have a successful movie is not actually that hard, is it? Like, the story in the Mario movie is just your typical hero's journey. There's nothing all that complicated, or there's no big surprise or hitch or anything like that. Sorry, News Squawk having some audio problems and was too loud. Everybody's always overthinking it. Like, if you look at Star Wars and what they did with Star Wars, they probably could have come in and done like the most expected thing and made the most boring story imaginable, and it would have done amazing. But they overthought it, right? And it didn't do well. And what the Mario movie does well is it plays to the fans. It respects the fans. It gives the fans what they want. So you get references to all of the various things that you see in the Mario games, and it's just good fun. And that's like, all you need is the character that people all already positively associate with, and just a standard story, and then execute that well. Because I thought that the way that they, you know, everything about the way that the movie did, like, it kept me engaged. It kept my son engaged, who's, you know, autistic, and it's hard to get him to sit for more than an hour, right? But he watched almost the whole thing, right? That's all you got to do, right? In some respects, I would say Hollywood is more stupid than me, but it's like the same problem, right? It's like, all you got to do is give the audience what they want, and you would just be selling like hotcakes, and they're not willing to do it. And it's the same thing with me. All I got to do is come in and tell people, you're going to become a millionaire from day trading, and here's how you're going to do it, etc., right? And sell them on all of these promises, and then the channel would be super popular. And I could be saying all of the same things, but all I'd have to do is, and I wouldn't even have to say anything about if I'm doing well or what, right? I could just ignore anybody that ever says anything about that and just pretend like I'm a millionaire and that I'm going to make you a millionaire. That's what people want, isn't it? I don't do it because I feel that it wouldn't help you. I feel like that it would be antithetical to one of the primary things that I'm trying to do, which is to build other people up so that they can contribute back, right? So that we can then combine our edge and the things that we've learned to become better traders as a whole. And in that respect, you know, having the channel be somewhat of a niche thing is good. Because if it gets too big, if you, you know, I have some evidence that suggests that there are some of these guys out there that, like, they have 200,000 subscribers and stuff. Some of the strategies that they were trading, when I backtest them, as soon as they got popular, those strategies started doing poorly. Which you know, is some evidence that perhaps their channel doing well eliminated a trade from the market. Right? So it's like, wow, okay. Well, so I'm trying to make the videos that like I think are going to help people out the most. And, you know, we've had success. And so I'm going to continue to do the thing that the audience knows and stuff. And I can just add other stuff, right? I can make other videos that are kind of a more general audience and that people will like. And I think that overall I can work it out. But there's a real issue with that people want to see how much money you have made before they're interested in it. What is that? Well, there's a lot of randomness to the market. So to really have lasting success with this, you need to be process focused, right? If you focus on the outcome, that will damage your ability to have success. You need to focus yourself always on the process. And the process is not, okay, here's the setup and then I take the trade and then I review my trade. The process is researching the market, finding edge, reading empirical research, doing your own empirical that's the process, right? People don't like the process, but that's what you've got to do. That's why so few actually are successful with this. Because when the process is presented to them, they're like, nah, I don't want to do that. Just give me the setup and I'll trade that. Is it possible to trade crude oil with order flow? I don't remember how, but someone said that because of futures and hedging, it isn't possible to have accurate information. Okay, so if you come in and you look at the market and you say, are they buying or selling? What's the cumulative delta doing? And you just try and trade purely off of that. Yeah, you're not going to be very successful because you really have to identify why the flows are happening. And especially in our markets, a lot of those flows are going to contradict what is fundamentally happening in the market because they're hedging flows, right? So that's why you need to be having predictors of order flow and looking at every flow and saying, why did that come in? Like today, okay, we had that big spike up on that news. Wasn't as much volume as we anticipated. Why not? Well, there's a lot of Fed speakers today. And in fact, the 10-year is actually back down to where it started in terms of cumulative delta, right? Like that's trying to follow the orders, right? So that's an important part. Roberto, well, welcome back, Roberto. Dark pools. So dark pools is one of those things that people bring up to be like, well, order flow is useless. But the reality is that when you see a flow come into a dark pool, eventually you're going to see it come into the futures or whatever, right? So the data that you're getting from the order flow is valuable information. It's just you need to understand why the orders are coming through to really make a good analysis of the market. In microstructure and HFT imbalances is, I would say no, actually. So if you watch my video on the stylized behaviors of markets, I talk about this, you know, the key things that we know, and I kind of go through a little bit about how we got to that point, right? And so the place where it seems that they made like some of the biggest strides was when they were able to get their hands on proprietary data sets from trading firms and exchanges to actually see the large meta orders being executed, right? So that's not explicitly about imbalances. And the imbalances issue is really, really interesting, because it is absolutely the case that like an imbalance, let's say, or positioning, let's call it, can affect future order flows quite dramatically, right? The problem is that with the data that we have, we don't get very good insights into what that is, right? When I'm looking at an order, I can determine based on the bid and ask whether that order is a buy or a sell, but I cannot determine whether that order is opening a position or closing a position. So in order for me to sort out what people's current positioning is, I would need more information. Now, there are some instances where you might be able to sort that out. Like you might be able to say, well, there's nothing really happening today, and it's just traders trading, and I'm seeing buying. That probably means that retail traders are going long. So if we start pushing to the other side, these guys are going to puke, right? So sometimes you can make those kinds of estimations, but a lot of the time you just can't. Now, you do get what is the commitment of trader reports and so forth like that. And especially the reports at the end of the week, but that only tells you what it was last week, so you can't really actively use that in your trading, unfortunately, right? So yeah, positioning would be really useful if we actually had the data to accurately calculate it, right? These exchanges, since they have their own data, they must know exactly what causes order flow. Well, so I don't think that the exchanges necessarily analyze their data like that. But the CME, for instance, does have like a small trading firm that they use that basically is there to provide liquidity and so forth. So they do understand this stuff, yeah. It doesn't matter if they're opening or closing. Yes, it does. Does the market's current positioning matter? I think it does. Somebody has a big position at a certain price, and then at a certain other price, they're going to have to puke that. Does it matter? Yes. Do we have the information to figure it out? No, we don't. If every order, I tell you what, if every order was tagged with an ID, so you wouldn't necessarily know who that person is, but you would know that this person that bought this order this day also bought this order on this day because they had the same trader ID, right? And I could determine that this guy bought X contracts yesterday and never closed them out, for instance, right? If I had that information and I could calculate the average position of every individual trader in the market, that would be very powerful information. Information that would be so powerful that nobody would want to trade. I don't think that people would want to trade with you if you were able to know that stuff. Like, there's a reason that we don't have that. They maintain anonymity in the market. Why hesitate to share it? Well, okay, so a couple of things here. Number one, you're talking about a lot of data, right? Like, especially in the stock market, you know, you're talking about billions of orders per day. And you might say, okay, 1,000, million, billion, is billion that big of a number? Well, billion is a big enough number that to store it on your hard disk and actually do data analysis on it, it requires like special kinds of systems. Like you would probably need to use highly distributed file systems and Apache Spark and all this kind of crazy stuff just to do even the most simple analysis when you're talking about billions, because it's orders of magnitude. It scales up very quickly. You're talking about gigabytes of data for just simple stuff, right? Number two is what they're doing is fairly limited, right? They're just doing market making, right? But like I said, there have been some instances where exchanges gave researchers data, or banks gave researchers data, and when they were able to reconstruct the meta orders, they learned some really significant stuff. Okay, dark pools are used when firms want to hide what they're doing. Yes, but the what happens, so again, if you're a dark pool, right, the way that a dark pool works is I come out and I say, I want to buy X amount of it. And then somebody else out there says, I want to sell X amount of this. And then if they match up, they match up. So it's like a market where you can't see the order book, essentially. Like think of it as a market where you can put in any price that you want, but you can't see any of the other orders, right? Okay. So that's the first thing, is there's a buyer and seller in that market. So does the execution actually matter? Maybe, maybe not. But one of the things that does happen is a market maker will go out there and they'll say, well, I think that somebody's buying this on, I'm willing to do it for them. So instead of the let's say the hedge fund having to go and call Goldman and say, I want to buy X thousand or whatever and work out a deal with them, and have all of these discussions and stuff, they can just go out to the dark pool and get essentially the same thing. So they're going to get a price, and then a block trader is going to take that and then go into the primary market, or sorry, go back to the secondary market and execute the block order. So like that volume usually makes it to the futures anyways, right? And then the block trades are reported, at the end of the day too. So, okay. So dark pools is not this like, it's really not what people present. It really isn't. You think we're in the second leg of a meta order? I don't know. It's been over 90 minutes since our initial move up, and we've just been going sideways. We have been having some upside action in the E-mini, but my point still stands. Dark pools do not make order flow useless, because the order flow eventually makes it into that market anyways. And there was somebody else trading it, right? So yeah, a big transaction happened, but there was two sides to that transaction. So that doesn't mean, like, I think everybody has this idea, well, if there's a large firm comes out and buys it, then I would want to buy it too. Well, no, not necessarily, because somebody else also sold that much. Smart people that have access to the pool. So you don't have access to the pool unless you're a smart person. Unless you're a sophisticated firm with some money. Don't dark pools still reference the visible prices? Not exactly. So that's kind of one of the things that I'm kind of hinting at here, is that the price on the dark pool will not necessarily exactly mirror what the current market prices are. And in fact, of course, in a dark pool, you can't see the orders, right? But if you could see the orders, I'm going to bet that the spreads that you would see there would be larger, right? To account for the block trader having to go out to the other market and sell it, or whatever it is they're going to do. So like another way of looking at it is like, okay, does the dark pool allow you to come in and execute with no impact on the market? No, it does not, because the people market making in the dark pool know that orders have impact and so forth. And if somebody buys from them, then they're going to turn around to the other market and buy it, then they're going to move the market up. So they're going to adjust for that in the price that they're giving them, right? So what it actually allows you to do is get a price similar, if not better, than what you would get through a block trading firm, but with the ability to get it anytime that you need it, right? Everybody treats the the dark pool as some sort of end run around the rest of the market that shouldn't exist, but it really is not having the effect that everybody thinks that it does. And if anything, if you understand how the dark pool works, it would suggest to you to come over here into this market and look for signs of large meta orders from those people, maybe perhaps trades coming in from the dark pool, right? So it suggests an area where there might be some edge for you. Yeah, we're gonna get some housing numbers here at the top right. U.S. existing home sales expectation 4.5 million. When I traded in Sigma, I would get filled on Sigma, but not on the NYSE. Interesting. Why are we answering people's questions? Because I don't see a valuable edge at the moment. And I could put the P&L back on, but it was like too much trouble to like make it work and look correct and stuff. Like there's not really a good way for it to all be automated. And I found that like updating it myself, you know, had negative consequences on my psychology. So I bothered, because it doesn't really matter. Like I said, yeah, it's a dumb thing. All you got to do is, yes, put the big flashy number up and people you'd probably get more viewers. Well, I want more viewers, but there are certain things that I'm not willing to care about in order to get them, especially when we do as well as we do anyways, right? Like I have to come back and think about it, and I'm like, we're doing something as niche as futures trading, and I'm just the simple guy, and we have over 10,000 subscribers. That is actually a lot of success, and I really don't have to bend over backwards or, you know, compromise on my values or be clickbaity and do all this other nonsense that I hate in order to be successful. Yeah, I would be more successful if I did those things, but I'm happy with what we've been doing, and I would rather do the things that I know are going to help my audience the most. I don't care about the P&L, but do guys, is that a measure of success when I say I don't care about it? What I mean is when I watch people trade. 100%. I think you're right. Well, I don't know if it's a gender difference. Here's the thing. People in general tend to care a lot about signs of success, right? You see, it is a logical fallacy that's built into the human mind, right? If I want to be successful at something, I should go and watch the people that are already successful at it and then mimic them. We are social learners. And it always comes back to, I got to tell you, you always got to go back to what I call the red pill. And what I call the red pill is that humans are affected by their nature far more than we want to admit. Okay? The reason that humans have been successful on this planet is because of their social tribal nature. And so the kind of things ingrained into our brains to enable us to live in a tribal society and be successful in a tribal society are very, very strong. Okay. And that social learning component in particular is very, very strong. So people have a very hard time with the idea that you don't want to watch somebody else and copy what they're doing, because that's what everybody will do. That's going to be almost every human's first instinct, is to watch somebody else and copy them. Okay, 4.44 million versus an expected 4.5. So that's slightly less than expected. That supports further the treasuries being up. I don't know if that's a big enough of a gulf to have another significant move up, but we are getting a few ticks there. Only people who treat trading as a hobby or gamble don't care about P&Ls. But this is what I'm saying, man, is if you take that approach as a retail trader, it's likely to harm you. Right? Like just follow that strategy, that approach to the world, to its logical conclusion. I should go and follow the person that's showing the most profits, right? And is showing the most success on social media. You're going to go and you're going to follow that person. And one of two things is going to happen. Either one, you're going to end up following somebody that's scamming you and is lying about it. Or two, maybe they are being honest, but they don't actually understand what a real tracker record is. Okay, so they're naive. Or maybe they are genuinely like giving you an edge or whatever. It becomes too popular and then that edge disappears. Right? So if you take that approach, it's almost destined, it's almost guaranteed to fail you. Right? What is the thing that I'm telling you? I'm trying to provide you a framework to do research and develop your own strategies, right? I can tell you information that we know about the market. I'm not necessarily giving anything up. I mean, this is definitely stuff that retail traders don't know, but the banks know all of this stuff. Okay, the banks definitely know all of this stuff. Okay, so a lot of it is that there's edge just sitting out there that is just impossible for the market to take advantage of because of the way that the market works. It's just not fundamentally efficient, right? It's just not informationally efficient. You have to be process oriented then at that point, right? At that point, what matters? What matters is you come in every day, you're doing good research. You're doing research that you can actually verify stuff. You're not going to just be fooled by statistical irregularities that don't take into account the fat-tailed nature of markets, right? Because the markets are fat-tailed, you have to come in and follow the process every day, because you're not going to get the results from the process all the time immediately, right? Because that's the way that the market is. The focus on the profits, I understand why people care about it, but I feel like that people are not understanding what I'm saying. Your focus on the profits will actively harm your trading as a retail trader. It actively harms you. because it prevents you from going in the right direction. It leads you into all of the clickbait that allows other people to take advantage of you instead. How can you possibly know? It's just like I'll come in here and I'll say, well, okay, yeah, we had that move off of the news, but then since then it's been dead and it's just been going sideways in this range. And there'll always be this person that will say like, well, I was able to make money off of it, so I must have a pretty smart, good edge. I'm like, okay, yeah, continue doing that for 5 years and then tell me how it turns out, because I've messed with that one before. I've seen a lot of people mess with that one before, and you know what happens is that some freak move comes out of nowhere and destroys you. Right? It's not worth trading when it's in that kind of random thing. Like, you need to have an edge. When it's in that random range, it can be a great opportunity if you have an edge. Right? If I know that they're going to move higher eventually, that I can try and buy the bottom of this range, it's great. Right? Otherwise, if you don't have that edge, if they break out of this, it could be really bad, and you get screwed hard. It's not worth it. Right? It frustrates the shit out of you that the people doing it wrong have larger audiences. It does. But it doesn't frustrate me that they have larger audiences. It frustrates me that the average person pays attention to the wrong thing. Because what it means is my job is harder, right? I need to do the things that I know will help you become the best trader that you can be, and will lead you to methods and approaches to the market that are more likely to be successful. And I know that the average person is going to want to go down a different path. And so how do I convince them to go down this path? That's a very, very difficult problem to solve. It's a very frustrating problem to solve. It's not that I care that I'm not the one having success compared to the other people. Quite frankly, I would rather fly under the radar to some extent with my trading, right? What do you think the retail traders want more? I think that they want a presenter who is a more popular YouTuber. Because that's what they do. What I do, I mean, listen, every trade that I do is here on here for you to see, right? And we pull up the results all the time. It's just when I'm doing well, I don't come here and be like, oh, look guys, I made money this month, everybody should follow me because I buy, because I know that it doesn't mean anything. Listen, guys. Just to be brutally frank with you all, okay? If you don't care about taking an empirical approach to the market, looking at the things that we know we can prove about the market, and basing our trading on that, and focusing on the process, and not focusing on the profits, and shouting to everybody how well you're doing, and all of those sorts of things. If that's not what you care about, because honestly, sounds like some of you would rather talk to the person that's showing how much money they made that month all the time, and all of those sorts of things. If that's what you want, go find those people and watch them I don't care. I only care about the people, the traders that want to come and are on board with the approach that we're taking here that is empirical. Because anybody that's not taking that approach is just a distraction. You're coming in, you're going to be presenting information that we can't verify. You're going to be using heuristics and creating noise that is ultimately detrimental to the people that are actually trying to do things the right way. So if that's what you care about, go away and don't bother me. I love that you like me and that you stick around, but if you don't agree with that approach to trading, there's no point in watching me. There really isn't. And I don't care if there are viewers out there that don't watch me because of that, because that's not the main objective. If the main objective was to become a popular YouTube channel, right? That was the primary objective. Then I would do things differently, wouldn't I? I would just straight up do whatever the thing is that would get people to click and clickbaity and would want to watch the channel. And I would just straight up lie about to people and tell them that I made $1 million last year and whatever, and they'd all follow me. And there's a lot of YouTubers that do that. And I'm telling you, if you look for that person, I almost guarantee you the person you end up following is going to scam you. They're going to lie to you and you're going to find out that they weren't actually doing it. Or, you know, that all of these trades that you thought they were making that were really great were actually fake, right? That's where it's going to take you, okay? That doesn't mean that being a more successful YouTube channel isn't a part. It's not a primary objective, right? The primary objective is to create a collaborative community that benefits everybody so that we can improve our edge through collaboration with the community, okay? Now, the larger that we get the community, the better. So there is a reason for us to grow the channel, and we've been doing very well with that, right? But not if we compromise the base foundations, which is an empirical approach and a process-driven approach. How can you improve the edge when you never use it? I don't care. Who said I'm not performing? Like this is that you're bringing up a different discussion now, which is like you have to be taking 5 trades a day or something like that. You don't. I can go a whole week without taking a trade if there's not an edge. And I find it really frustrating that like honestly, just ask yourself, is there an edge in this 10-year treasury market right now? Is getting the 4 ticks on the range between 24.5 and 22 all that worth it? Because I'm telling you, what you're looking at right now is just noise. The big players did not come out and start shifting and moving their positions. They're holding pat, probably because there's so many Fed speakers today. Why it frustrates you that you don't have enough audience? So let me state it again then, okay? Number one, we've done very, very well. But what I would like to do is I want a collaborative community, and having a larger collaborative community would be a good thing. The problem is that people are dumb. The vast majority of people are going to fail at trading because they insist on approaches that are never going to work in a competitive market. You're never going to be successful in a competitive market if all you do is try and watch other people and copy them. You will never be successful in a competitive market doing that. You just straight up, you won't. Most people, that's the approach that they're going to take. That frustrates me. That frustrates me that we as a society are intrinsically held back by our very human nature. and that it appears that there is nothing that I can ever do to change that. I can only try and get the people that are smart enough to see past those. It's sad and it's frustrating. Absolutely. And we're going to talk about it every day. Why do we talk about it? Because you have to understand the problem to begin with. So that this is something that Moneyball does very, very well in showing in that movie. You've seen that movie Moneyball, right? When there's that scene where they're talking about who they should draft, and Brad Pitt is like, hold on, what is the problem that we're trying to solve here? And they're like, well, we're trying to replace these three guys, or we're trying to do this. And then they're like, oh, we need this many home runs or whatever the deal is. And he said, no, the problem is this. You've got some teams that are rich, and then there are some teams that are not rich, and then you got all of this crap, and then you got us down at the bottom of the pile, right? And why does he say that? Is he doing that to discourage people or to be frustrated or to piss on them or anything like that? No. The point that he's trying to make, and the point that I'm trying to make to you, is that when you are at a disadvantage like that, you are not going to be successful by using conventional methods, right? When you're at a disadvantage like that, you're going to need to use unconventional methods to have success, right? So we have to understand why traders have the tendency to do that. We have to understand why these things happen in order for us to craft a strategy that will allow us to be successful and overcome that. And we have done that. What is that? We've gone and we've looked at the research. We've taken an empirical approach. We understand the statistics so that we can account for the fat-tailed nature of the markets. And what we've learned is the market is very statistically efficient and not very informationally efficient. That the orders are what moves the market. And so what we need to do is predict the orders, and informational inefficiencies are one of the best ways to do that. And so that's what we base our trading on, right? That's unconventional. That's not what most retail traders do. Most retail traders tell you to put a bunch of moving averages or to look for certain candles patterns and then go and trade, and they're going to go and do that. And listen, there's a lot of YouTubers out there that are going to claim that they're having success and that they can show you their success. So go watch them. I don't think that you're going to get a whole lot out of watching them. I don't think that you're going to get as much as from watching on this stream, but I also understand that because of the way that people work, those channels are probably more likely to do well. You might get lucky. The YouTube algorithm may someday throw us a bone. And you know what? We've been very successful with doing this. Like, that's the thing, is that I understand where the problems are. I'm constantly trying to solve this problem about how do you deal with that nature of people. It's a tough problem, but it turns out we're actually doing really well with it. So well, it looks like they are moving a little bit to the upside. You're right. There was about 10,000 contracts worth of buying in the last 20 minutes. But I don't have anything to suggest that that's going to be coming. Yeah, I do. I just tell you straight up, like, here's the thing. Okay. So if you were to come into here and you were to say, well, because of X, Y, and Z reason, this is why we're likely to see long flows today, then I would be like, well, okay, let's lock it and we would discuss it, right? Okay. But if you're going to come in and you're going to say, this price action setup is a good setup, we should just trade that, and I've back tested it and I know that it's wrong, then yeah, I'm going to tell you you're wrong. Guys, if you don't like being told you're wrong, don't come into my channel and say wrong things. I'm very, very, very flexible in terms of like letting people say what they want to say and having a discussion. But the problem is you guys want to come in and have discussions about things that we've already pretty conclusively proven are false and aren't worth our time. I've coded a lot of robots, and what I find through my trading, through my robot testing, is that the market is very statistically efficient. So the things that you're gonna find like actual edge from are gonna require you to get into a much more sophisticated modeling and statistics and like machine learning sort of things in order to find an edge with it. That if you were to, like, for instance, on NinjaTrader, you know, NinjaTrader can like generate strategies from you iteratively. You could go in and put like every indicator on there and give it to the robot and like have it churn for forever, and it's probably not going to create a profitable strategy for you, just because that's too simple of an approach of, you know, just combine a couple of indicators and then have a trade like them. Yep, but then it becomes a discussion on why only volume is not an empirically proven. Exactly what it does. Unless you have some piece of information that suggested that that volume was going to come in, I don't care. Why should I waste my time on things that people think that work but aren't proven? That I can't show through empirical evidence is useful, right? You make money on it, that's what, but I mean, are you really? You made money on it that one time. I don't care if you made money on it one time. I care about if you consistently doing that day in and day out makes you, you know, how do you perform on that over 5 years? And like, what's your Sharpe ratio on that over 5 years? Right? Well, do you think they're just gonna make me waste time arguing? Well, I'm not like particularly interested in taking a trade at the moment, so. Like, I'm looking at the S&P is still stuck in like this 10 tick range sort of a thing. Sorry, 10 point range sort of a thing. The dollar's moving, but it's a little bit limited. The treasuries did have a good move up, but I am seeing like some counter volume in here. You can notice this iceberg right here at 24.5. So I would like to see that situation resolved before I even think about doing something. If you don't have an empirically proven method, then you don't make money. And if you do make money, then you are using an empirical method without realizing it. And so I'm right anyways? No, because most of the time when people say they're making money, it's like they made money over 6 months. And I'm like, well, who fucking cares? There's lots of people that made money in 2020 and are blown out now, right? This is why we have to, like, I am full of myself. I'm not full of myself. I'm just giving you guys the straight up truth. See, like, here's the problem is that you care about how people say things and how you feel about how people say things. I don't. I only care about what we can actually prove. Right? If you can't use the market data to prove over a 5-year time period about the performance of something, I don't care. You might not understand the fat-tailed statistical nature of markets to understand why the data point that you're talking about doesn't matter and isn't proof of anything, but I do, and I'm not interested in talking about those things. It's not because I have a need to be right or something like that. It's because I know these things and I know to not waste my time with it. just as much as you know that it's dumb to jump off of a cliff. Right? You're sitting here, it's what, like, from my perspective, we're like sitting here on the front of the Grand Canyon, and you're like, well, we should jump off. I jumped off on it yesterday. Okay, jump off of it today. See if I care. I'm not jumping off it because I know what happens. And maybe you jumped off of it yesterday and you got lucky and you landed in the water and you survived. I'm still not going to do it because I have information that I can prove that I know it's a bad idea. Yeah, that's the thing, Robert. This is why the conversation is so frustrating. Is there are people that are here and are dedicated viewers every day, and they know what we're trying to do, and I've told them all of these things before, and they still argue with me. I can show you my trading history for the last 5 years if you would like, but number one, we've only, kind of like our current way of doing things, we've really only been doing for like 2 years. I would really only say like the last 9 months. We did really, really good for like 6 months, and then March, I think it was a little rough. Or was it February? Right? So I could show it to you, but it wouldn't be so impressive. So like, just let me put it to you this way again, right? If your what was the word that I'm looking for? Oh my gosh. Okay. If you're looking for, has this guy made significant profits over the last year even? Okay. Go watch somebody else. Seriously. Okay. I did okay for a period. It's nothing too special to speak of. We're basing our trading on empirical evidence. Like, the stuff that I'm telling you about is stuff that you can go and you can prove with the data from the market. There's these studies you can read about it. Like, this is like proven information. It's up to you to take it and go and make something of it, right? If you're looking for somebody to follow because they made money in the past, go away. Because I don't want those people in my stream. Seriously sit and think, because I care about you guys and I love that you're here and I feel like that you're here because you like me. But ask yourself seriously, do I care about looking at proven empirical information, discussing things that we can prove about the market? Or do I care about somebody that's telling me they're making a lot of money? And if you care about that, you're watching somebody that's telling you they're making a lot of money, go away. I don't want you here. No, so I don't care about like what your history is. I only care about if you can prove to me with market information that the particular behavior that you're talking about is a thing. Back before your ego exploded. Okay. When we have a 5-year method, then you come back. Then go away. Am I a Reddit god? I'm not. I've always been on Reddit. I spend less time on Reddit than ever. Much less time on Reddit than ever. I don't even think I looked at Reddit at all yesterday. Yeah, well, I'll tell you why why it keeps coming in down to this, Lucas, is because I'm telling you stuff. I'm telling you like empirically proven behaviors of the market and like actual information about the market, right? And you're not actually going out and learning about it, right? See, like the conversation that I would like to be having is, okay, here's what we know about the square root law of meta order impact. And then you might say, well, okay, but you have to remember that there's the domain of validity in which the square root law of meta order impact is actually applicable. And if you look at the market right now, we're probably outside of that area, right? And then we could have an argument about whether we were, and that would actually be like a real discussion, right? What, the paper that showed that the HFTs that were being successful were more often using the aggressive orders? What was wrong about that then? Is this a spammer on Discord? Hold on a second. Yeah, it is. We're going to ban this person. I hate the spam on Discord, man. By the way, another thing that I should have mentioned earlier is that at the moment, this is not something that I can prove or anything, but I'm suspicious about like that break up to 26. Because it's still behaving range bound. And that kind of looks like a fake breakout sort of thing to me. I still see, like, from the way the volume is going, it's kind of iffy. Like, there is a lot of volume, but the cumulative delta has come back quite significantly. And like, the amount of activity that I see in the level 2 is still pretty, it's still quiet. Your numbers go higher when we give you a hard time? I mean, that's probably true. If I come in and I'm making like a really impassioned speech, then people are more likely to stick around and watch. Oh no, but the amount of viewers that we have right now is pretty typical. No. Another thing I find frustrating though is like, again, the thing where it's like you have to trade every day. I'm not gonna take a trade every day. And if you're gonna come into like the second to last weekend of the month, very likely that I'm not gonna be taking very many trades, right? Like the first 2 weeks of the month, there's usually a lot of data and there's a lot of stuff for us to work on. The last week of the month, there's usually some flows that we might be able to take advantage of in terms of end of month flows. They're saying stuff in the middle of the month. They're saying a lot of I think Akshay was telling us that a lot of that volume happens during the middle of the month too, although I've never been able to notice or sort out that volume. But I would say that like in the middle of the month, especially when like the new supply is coming in, that you get a bit of movement. But there's like that little period in between that can be awfully dead sometimes, and I found that it's better to just not touch it. So if we say it's held to a rigorous academic standard and you say it and it's fine. Okay, so I think that everything that we talk about should be held to a high academic standard. And it's just that the things that I'm going to talk about are going to be based on that set of stuff that we've proven that I've identified as significant information and have become obsessed with, right? So that only happens because I'm setting the discussion, and I tend to talk about the things that are proven, right? No, well, okay, so the problem that I'm saying here is like, okay, so I can tell you the current conditions, right? Current conditions is there was a little bit of a breakout and it's kind of failing. Oh, there's actually, it looks like there was a little slip to 22.5 that I missed there. Let's go, okay. Did kind of reverse back down. Okay, but I'm not saying, I'm only saying that was the condition. That's what we're seeing right now. I did not say that is going to lead to this, or it's going to move this way or something like that. I could list out scenarios, that would be different, right? But it seems to me like you're implying, oh, I saw volume here, that's likely to move it, right? So once you start to move into a prediction, then we're talking about something different, right? And I don't think I ever made a prediction, did I? In fact, I think I've been pretty clear that we're in an area where I want to avoid making a prediction, that I don't see an edge in this market at the moment. Oh, so? Man. Okay, everything is a prediction when placing a trade. That's true. And if I had taken a trade and then it was ended up being wrong, then we could talk about that, right? I highly doubt anyone actually makes trading money or money trading. Well, when it comes to retail traders, there really is like only 5% of people. You doubt that it's even that 5%? No, I don't think it's actually like that. Do you look at TPO? No. So I do have volume profile charts, and we're making it working on a video on volume profile. I don't want to go into that whole spill because I already did it today. You can go back and watch earlier in the stream. I can talk about it. But. Okay, there they did come back through there. So this right here is a little weird, right? So they've now slipped 2 times where they were trading upwards of 24.5, and they came down very quickly within a minute and traded down 3 ticks. And there is an iceberg there at 24.5. and I am seeing the cumulative deltas flip. I don't know if that is indicative of a large meta order that we could trade to the downside. It's kind of late in the session for me to be taking a trade, right? But that could be, you know, yeah, it actually was a false breakout and it's coming back into the area, right? Someone's, yeah, the cumulative delta is to the downside, but there are icebergs. I mean, it only came back to 22.5. I think the temptation would be, oh, okay, false breakout. That must mean that we're gonna smash back the other way now, right? And what I'm kind of trying to say as well, I was right. My instinct was right to be suspicious of that quote unquote breakout, but that doesn't mean that I want to take it short, right? I'm still stuck on that. It feels like that you guys want kudos or to give kudos for taking the trade, and like if you took a trade, you may like it, good for you. But I want to see things proven empirically, right? And if you can't prove it empirically, then what I would like you to do is I would like you to up your skills so that you can. Right? I don't like I can't get inside your mind, Lucas. I would be really sad if you left. Right? Yeah. You don't make calls, you're right, Uzi. That's why, like, some of these things that you're saying, I'm kind of like, I feel like you guys are just saying them because you're arguing with me. I don't actually feel like you really believe them. Because, you know? AO is kind of like, well, I don't know why he's here, to be honest. Because it doesn't seem to me like he believes any of what we're saying, and he doesn't believe in the idea of what we're talking about either, and I don't know why he's I don't understand where he's trying to come from. You should be more fair to the people in your chat who are trying to trade. Well, okay, so let me try and approach this one again. Now, I don't think they're trying to make this a kind of a signal room. What they're saying is you're not making people feel very good, right? Which is obviously true, right? Which is obviously true. I'm not that person, right? I used to be that person. I could be that person again if I wanted to, but there was a lot of other negative things that came along with that, and I didn't like being that. You would think, you know, the way that people talk about it, being that a caring, sensitive, empathetic person is like in our current society thought of as a really good thing, but I hated it. I absolutely hated it. It was like one of the worst times of my life. I like coming in and trying to be effective in getting things done, and you know, learning things that we know are true, or that actually have something backing them up, right? But my intention is not to make you feel like shit, right? My intention is just to push back to say, well, it seems like you're making a claim that I don't think is backed up with evidence, right? Well, you're right, because what's going to happen is going to be like, I took a trade and I did really good, and I should be like, oh my gosh, good job, good for you. I'm so glad that you did that. I wish that I could have taken a trade today, right? I'm really pissed still, honestly, to be frank with you. I'm really upset with myself that there was a perfect opportunity for me to click at 3.56. I don't know, maybe if I had clicked it would have been too slow and it still wouldn't have hit, but there was an opportunity there for me to hit it at 6 and make 20 bucks, and I was too chicken to do it. I come on to you to rant when other retail traders don't understand things like how a stop loss. Well, okay, so here's a question for you, Lucas. Because you try and take equal risk reward, right? So how do you approach that without ending up occasionally taking a loss that's much larger than you want? So I saw somebody on, I've actually seen with it. But you're not putting us like how else do I rephrase this, right? If you don't have a stop order in there, how do you ensure that your stops are 2 ticks away or whatever the deal is, right? All right, how do you avoid that situation where it sweeps against you and you get screwed, right? That's something that I've really struggled with in the market making style of things, is like, if you're a big trader and you can take on multiple contracts, then when that happens, it's okay because you're able to hold multiple inventory and all of this sort of stuff, right? But if I'm doing it with one contract and I say on average I want to make 4 ticks and lose 4 ticks, if I put my stop at 4 ticks, that increases my probability of stopping out. And there's going to be so many times where it will go there and it doesn't actually, you know, I would have had the chance to get out, right? So it makes sense to not necessarily put the stop there. But then you'll get the slip. You get the slip and then it screws all your stats up, right? Well, then go to Fat Cat. I tried watching his channel and I didn't see any, like, I mean, you know what I'm going to be looking for. I was like really long videos where he was talking about a lot of stuff, but he didn't prove anything. The sweeps are, so you're okay. So you're the same spot where I am, where it's like, well, when I'm doing that, it doesn't happen enough for it to be a problem. So for the last, like, let's say year and a half, when I'm really bored, I will come in and start doing market making type of stuff with sim orders, right? And taking on multiple contracts. And like, it keeps working out for me. And I know that there's that situation where it would really screw me over, and it just hasn't happened yet. But when I was doing it a little bit more seriously on the S&P, it did happen to me, and I got screwed over so hard in the worst situations. Like, that sort of thing will happen to me, and it will be such a devastating loss that it makes me have to pull back on my trading, and then I'll miss like the best opportunities after that. So that's kind of why I stopped doing it live. And I moved to only taking the live orders when I really felt like I had had a good edge on the market with some informational inefficiency. And as the thing has just been that, like, last year that was really great, right? But this year it seems like it's been a lot harder to find the information for some reason. Yeah, same, or a prop account, right? Well, I would be really careful about those saying that a sweep that goes through against my side of the market is an anomaly, because the problem is that those quote unquote anomalies are so big that they can make or break years of trading. Yeah, ES is hard. When I was speaking to the traders at Goldman, and they asked me, like, what do I like in the most, and at the time the thing that I was the most interested in was the S&P 500, and they kind of laughed because they had like the same approach, which was like that it's incredibly difficult to build a sustainable edge in those equity index futures. And that it's fun to trade, but that they didn't really, you know, the things that they had was like algorithms that will trade sorts of, but like, you made my point. No, so I want to go back to that. Listen, I don't understand the fat cat thing. AO has been coming in and pushing him for a really long time, but like I go and I watch those videos, and it's like 2 hours of a guy talking to not really share all that much with you. And what he does share is really just like his opinion and feeling of how the market tends to go, and it isn't actually based on any kind of data. You would only take one tick in ES in this market? Really? There's way too much noise in ES for it to be a one tick. Oh, yeah, I know what you're talking about, Trading Bunny. Is there a way to lock these so that I don't have to restore the windows one by one? Is there a hotkey? Okay, so what's happening is if you take a window and shake it, it thinks that you want to minimize everything but that window. And I believe there is a setting. Hold on. Is it under personalize? No, let's search for it. Windows 10 disable shake window. Okay, go to settings. Settings, system, multitasking. Oh, it doesn't show it on mine, but you may have a setting that says when I grab a Windows title bar and shake it, minimize all other windows, and you turn it off. You could trade 10 lots. You know, so it's hard for me to see because because I don't have the So hold on, let's bring this back up first. I'd have to pull up a separate DOM, right? Yes, what are we? Yeah, we're in June. And turn the tick rate multiplier to 1. Well, you can definitely get away with 10 lots, but 1 tick seems a little bit. Yeah, it does look like you could get away with it. Yeah, well, the E-mini is really tight, so those kinds of market making strategies are probably more likely to work right now, right? Like, the problem that I still have is this possibility that like the move index busts out again in the next week. But if we go another few months and that doesn't happen, then it really would make me move more into a mean reversion strategy. And I would have been much more willing to have tried to take from 20 to 22, for instance, right? Like identify the liquidity hole, and if it's a large enough hole, just trade the edges of the hole. And or based on a divergence with my correlated instruments. I think I would probably still need to go with 2 to 4 in the E-mini, to be honest with you. It is much more like what it used to be, though. Yeah, you definitely don't want to be in it for very long, right? I don't know if I would. I mean, the larger thing is that like ES is definitely not the best instrument to do it in, right? Because you get in these spots where like, yeah, you can take it 1 tick here a bunch of times, and then it will like push down 8 ticks all at once and then come right back to where it was, right? That's just like, ugh. Maybe Roberto was the one trolling. No, he's just new. He's not. Listen, Roberto, you don't need to get protective of me. I'm not. Oh, I didn't see the Starship test. Is that doing that? What do you think about concepts like absorption, exhaustion, sovereigns, etc.? Okay, so those are definitely all things, right? Trying to predict that those things are going to happen is like really hard, and trying to use those things to predict the direction of the market in the next few minutes is also really hard, but they can tell you some things sometimes, right? Especially when you get an absorption in an area and then they're able to break through it, that usually results in a little bit of a slip, right? So if I have some reason to think that they're going to push through it, I like to put stops there. Like I'm going to close this now. We don't really have a situation like this right now, but I'll come in with my stop limit order and I'll say, if they get through this 22, I want to try and hit into it just as it's leaving. So I'll put a volume stop in there, and then if it gets below 250 contracts, it will hit in with a market order, and then hopefully I can get like the other side of it. Hopefully I can, then I can put a limit order on the other side of it and buy it like that. Right. So those can be useful information. Just be very careful about with any of the things that we're talking about, trying to use past market data to predict future market data, because it's not very predictive from the data that we have. There was a point down here, by the way, where there was some liquidity, right? I think it kind of disappeared, but where was it? Let's see here. 857. Yes, there was. There was 1,000 lot that bid at 22. So it was a little bit bigger than that at one point, but it's come down a bit. It seems like the liquidity is much more like normal, but it's getting tight because of that, right? So if we get into an active market, we should be able to have some real fun now with this liquidity, but this week has been tough. Okay. It is time for me to go. Man, I am a little frustrated by that. You know, like we did get some serious data, but like the market went dead after the data. So hopefully you get these Fed speakers out of the way, and maybe we have to wait until next week, but I'm hoping that next week is a better market. Yeah, we say be excellent, team, instead of stay profitable, friends. Because the stay profitable, friends was just to be funny, right? And stay excellent, team was something that was more in line with the principles that we're trying to teach. So I switched to that, and I like it, and I'm staying with it, even though I think it's cheesy as hell and stupid. Yeah, it sounds like a team leader at work. Yeah. But I hope that, I don't know, if like the problem that one of the problems that I'm having here is that I don't feel like that you guys are looking at it like that, right? If that's not what I like, here's the thing, is that if the audience wants it bad enough, I can shift things, right? Like I can do stuff on my own, and if really you're only here for entertainment, then I can just focus on being entertainment. Anyways, I gotta go. I'll see you guys tomorrow. Stay excellent, team.